Hi guys, hope you're well and welcome to another episode of Finance for Founders. Today, guest is someone who's turned deep understanding of property finance into one of the UK's most trusted specialist lenders. Scott Marshall is the founder and managing director of Roma Finance, a company built on the belief that lending should be fast, flexible and deeply personal. Launched in 2009 during one of the toughest financial climates in modern history, Roma Finance has grown into an award-winning lender with a standout philosophy: put the borrower first. Scott's journey didn't just start in finance. It started in engineering and it took him through corporate deal-making before finally founding a business that now funds millions of bridging, development and commercial property projects across the UK. In this conversation, we unpack what it takes to launch in a downturn, build trust in a high-stakes industry, and lead with clarity and innovate with heart. From product launches to economic shift to scaling a value-led company, Scott shares insights that every founder, investor, and property entrepreneur needs to hear. This is a story of calculated risk, strategic growth, and what it really means to love to lend. Here's my conversation with Scott Marshall. Scott, welcome to our podcast. How are you?
Wow, what an introduction, Samuel. Thanks very much indeed. Could you send me the transcript after this podcast? 'Cause I'd like to use that introduction in other places as well. That was superb. You could actually, I think you're lost in terms of what you do. You should be an agent for people looking to promote themselves. That was fantastic. Thank you. Bit humbling as well.
Well, to be honest, it's a reflection of your impact and the impact you've had. So what we do very quickly is, for our audience to get to know you, we do some quick fire questions, pretty much yes or no questions. So I hope I don't throw you under the bus here.
Okay.
You ready?
Yeah, let's go for it.
Fantastic. Early bird or night owl?
Early bird.
Tea or coffee?
Coffee.
Emails or phone calls?
Phone calls.
Netflix or cinema? One business tool you cannot live without?
A telephone.
Last movie you watched?
The last movie I watched. God, I don't have a lot of time for films. You've caught me out. You've caught me out. I say my favorite film is Shawshank Redemption.
Yes, I love that. Morgan Freeman and Tim. Is it Tim? I forgot his name.
Amazing film.
Yes, it is, absolutely. Well, I was going to say last movie watched.
Well, we've done that one. So I couldn't remember which one it was. I'm actually watching at the moment. So I'm watching a couple of series. I've just started watching Gangs of London, the third series. Okay, so I watched the first two, and it's a kind of thing that you can only watch once because it's that gory.
Yeah.
You can't go back and watch it again because if you're a bit squeamish like me, you struggle. And so I've just started watching series 3. Watched episode 1 last night. I thought I'd be able to watch episode 2, and my wife came home and she's not really into it. It's not really her thing. Hopefully episode 2 will be tonight.
Excellent. Podcast or books?
Podcast.
Favorite way to switch off after a long week?
Gym.
Oh, wow, okay. If your life was a movie, who would play you?
Probably Harry Hill. No, I'm joking. I'm joking. I would love someone like Tom Hanks.
Okay. And lastly, if you had to start from scratch again, would you do it all again?
Actually, to be fair, some people might say Shrek.
Don't be so mean to yourself. Would you do it all again?
In a heartbeat.
Fantastic. Scott, welcome to our podcast.
I've just realised that I'm drinking out of somebody else's mug, so just excuse me whilst I put this into a Roma mug so I can get a bit of product placement on your podcast. Right, there you go. Cheers.
Fantastic. So for our audience, tell our audience a little bit more about yourself. Can I be honest with you? As a team, we've sent out some email blasts saying that we've actually had the opportunity to invite Scott to our podcast. So please, if you could, just give the audience a little bit about who you are and what you do.
Okay, so I'm the founder and the MD at Roma Finance. Roma Finance is one of the UK's leading specialty finance companies, and we specialise in property lending. But we're a little bit different from most firms in our space in that, as you've quite rightly said, we put the borrower at the heart of all the decisions that we make, number one. Number two, we believe that a good borrower can create value out of a bad asset. Okay, whereas a bad borrower can destroy value in a perfectly good asset. So get the borrower right, and actually you never need to worry about the asset. Okay, so our whole business is predicated around what can we do to enable our customers to create wealth for themselves and their families. So therefore, all of our lending is done around if a customer is either adding value to a property or creating an income or deriving an income from property, they are improving their own financial circumstances. And so from a common sense perspective, that approach to lending means that, again, we've got to underwrite the borrower, we've got to profile the borrower, we've got to make sure that they are capable of achieving their objectives. But ultimately, it's the borrowers themselves that are not only de-risking their own position because they're increasing their net worth, but they're also de-risking our loans themselves. And so for me, that is what I call common sense approach to lending. And if we think that we are funding, 75% loan to value, or on a development project, 85% loan to cost, we are actually in business with that customer. We are their majority business partner. And so therefore we've got to know, like, and trust who we're dealing with. But equally, our customers and our borrowers, they've got to know, like, and trust us. And I think one of the things that's missing in so many businesses these days is relationships. And so what we've tried to do is to put the relationship back into lending so that we are building strong, long-term, deep connections and deep relationships with good people. And we can back them on their journey. And we've got what we call our customer for life proposition, which is where we effectively can take a customer and we can go through the different products for them so that they have got the opportunity to have a partner that's capable of taking them on a journey. And that's what this whole business is about: sticky, long-term relationships with good people.
Fantastic. We're going to get into more details about your general products and operations as well. But before you do so, I would like to ask your early years. How did you get into Roma Finance? Now, I know that you originally started off as an engineer.
I did.
What made you make that transition? What encouraged or inspired you to step out on your own? And I know as well the time in which you stepped out was during 2008 economic crunch worldwide. Most people would have not taken bold steps at that time, let's just say. So if you could just talk us through your transition, becoming an engineer, and then your position where you are now.
So yeah, with pleasure. So there's three parts to that question, so I'll deal with each part separately. So in terms of engineering, I was good at maths, I was good at physics. At school, my father and my grandfather and my great uncle actually were engineers. They had an engineering business, and so it was natural that I would follow in the footsteps of my father and my grandfather. But what I realised at university is that businesses in the UK are generally, even engineering companies, they are not generally run by engineers. They are generally run by finance people. And so I felt that in order for me to be able to run an engineering business, I would need to, once I had the engineering degree, step out, get myself qualified as a chartered accountant, which probably will resonate with you, Samuel. Okay, step out, get myself qualified as a chartered accountant, and then be able to get back into an engineering business to run it with a financial hat on. So I'd have both sets of skills, engineering skills, and I'd have financial skills. But I applied to what was then the four of the top five accountancy firms. I got offers with KPMG, I got an offer with Deloitte, I got an offer with, I think, Ernst & Young as well, and I got an offer from Arthur Andersen, which you'll know of Arthur Andersen.
Yeah.
But the offer with Arthur Andersen was more interesting. It was to do corporate finance rather than to do accountancy or audit. And it really appealed to me, buying and selling businesses. So I went into Arthur Andersen and got myself qualified as a corporate financier. And unfortunately, Enron happened. Back in 2002, I think it was, Enron happened. My wife was pregnant with our first child, and so there were shrinking the firm down. I applied for voluntary redundancy, got rejected, and thought, well, I'm going to leave anyway because I needed the money. Moved to a boutique corporate finance firm, and crucially, I never met the owner of that business. Making it simple, there was not a cultural fit between me and what I like and what I stand for, and the owner of that business, and it just didn't work at all. And 9 months later, I was no longer there. Ironically, when I was at Arthur Andersen, I'd made a call into what's now become Together around securitization, and the opportunity to do securitization products. It was too early in the kind of financial world then, and nothing ever happened back in the day. When following my short stint at that boutique corporate finance firm, I then joined Together, what's now Together, and I kind of worked my way round the different departments. But that was the idea anyway. My first secondment was in underwriting, and I never left that first secondment. And I went from effectively a trainee underwriter to senior underwriter to head of credit or head of underwriting. Then I became director of credit and risk. Then the global financial crisis happened, and I was made redundant. My role was made redundant. But at that time I had 3 kids, and I remember really clearly my wife being distraught that I'd lost my job. I think it was either the 4th or 5th time I'd been made redundant. It was either the 4th or 5th time I'd been sacked. I'd had a sort of checkered career where I'd struggled to hold down a job working for somebody else. I'd really struggled. So I started Roma, and Roma was actually a side hustle, and that was my side hustle. So people listening will probably have heard of the business called Octopus. So Octopus have got the energy business, which people know about, but there's also Octopus Real Estate. Octopus Real Estate is the business that was formerly known as Dragonfly, that was formerly known as Drawbridge Finance, and I formed Roma to be their subcontract underwriting service. Okay, or to be a subcontract underwriting service, and they were the main client, I should say. And I did that work on and off for 18 months, and then that work started to dry up because I didn't want to move to London. They're based in London, I'm based in Manchester. Didn't want to move to London. So then I had this business, Roma, and Roma is named after my late grandparents, Rose and Max. That's where the name comes from. I had this business, Roma Finance, and I'd been doing underwriting, obviously at what's now Together, for what was then Drawbridge Finance, and a couple of other smaller clients too. And I was like, well, I need to do something with Roma. I thought, I know, I'll have a go at lending myself. So there's a whole conversation here around that needs to be had over a beer as to how that all happened. But essentially, I went on holiday in August with a laptop. And by the time I'd come back, Roma Finance was a proper registered financial institution with the FCA.
Wow.
And it took me two weeks to get all that done. It was much easier then than it is now. Probably quite rightly, to be fair. It's much harder now. But Roma was a proper registered financial institution, and we started lending in December 2010. I remortgaged my house, or took equity out of my house to do the first loan. I was backed by a high net worth who's still involved in the business, and for 4 or 5 years I ran it as a sort of cottage industry, a bit on the side, because I had a day job that was not in financial services, it was actually in IT, and I needed to really try to scale what I thought was quite exciting. Now, it was quite interesting. Because I'd been in underwriting, or an underwriter for such a long time, but I had no other, so I had no collections experience, etc. I decided to stick to what I was good at, which is actually the underwriting and the structuring of deals. And part of the reason that's kind of led me to where Roma is today is because of the fact that I didn't have any collections experience. So I couldn't afford for any deals to go wrong because I didn't really know how to get the money back in again. And I didn't particularly want to start repossessing people's houses and what have you. That's just not what I like to be able to sleep at night. So I kind of almost fell into Roma's current business model because by default, because I didn't have the skill, I felt I didn't have the skill set at the time to go and also didn't want culturally to start being very heavy-handed on the back end. Most of the industry within the bridging space in particular are what I call property pawnbrokers, which is, here's an asset, that's what it's worth, this is the loan amount, that's the loan to value, and if something goes wrong, we'll just pursue the customer and we'll take our profit out of the equity the customer's got in the property. I didn't want that model, because if something we just had it for the financial crisis, property values are tanked, and when property values come down, and someone's not doing something to the property to improve its value, the delta between a rising loan balance and a falling property value, that inflection point becomes much sooner in the curve. So I felt that if I could lend to people that were using my money to increase the value of an asset, rather than putting the money into something else, increase the value of the asset, then actually what I'm doing is I'm building in wiggle room into my loans. I'm building in time, and I'm building in the ability to build a relationship with somebody who's probably going to want to go again and again and again because they've got a skill set of improving property, etc. So and it meant that I wouldn't need to draw on skills that I didn't have or had to learn to do the collections. So the kind of stars were aligned effectively. That's what Roma's business model became by default, because of I didn't want to, and I felt I wasn't able to do the stuff that I didn't know how to do, if that makes sense.
Absolutely.
And so that model has stuck with the business since, which is lending to somebody who's either adding value to or deriving an income from property, to the idea being to improve their net wealth so that actually the loan becomes de-risked and it becomes more affordable for them and life becomes better.
I love that. How would you define whether a customer qualifies from a loan from Roma Finance? How do you define that individual? Because I'm guessing not anybody can just wake up and say, oh, I feel like just taking out money, let me go to Roma Finance and get money out. So what is your criteria? What's your requirements before lending?
So we really want to understand the person. So the way that we underwrite is, again, different from most people, most of the firms. So that we underwrite in this way: borrower, story, asset, exit. Okay, so bear that in mind: borrower, story, asset, exit. So the borrower we've got to understand the person or the people that we're doing business with. So what is their background? What have they done before? What have they got in the background? What skin have they got in the game? And if the borrower stacks up, then we look at the story. So what are they doing? What are they using our money for? Why are they doing the project? What do they hope to gain from it? Who else is involved? And are they likely to achieve their objectives of making money? And are they making enough money? So if something is marginal, we probably wouldn't want to be involved, because there has to be material upside gain for a customer so that they're incentivized to trade through any problems if there are any problems. So we've looked at the borrower, and we then considered the story. So if the borrower stacks up and the story stacks up, we then look at the asset. And if the asset doesn't stack up, then most likely that borrower with that story is doing that project specifically because the asset doesn't stack up, and they're going to do something to that asset to make it stack up, which means that they'll be able to get their exit from our loan, which pays us back our money, plus some profit hopefully for us as well. But ultimately they're making material wealth for themselves, which means they can use that wealth to go again on the next projects. And hopefully, if they've got a sweet taste of working with us, they'll want to go again with us. And so that is the nature of what we do. So borrower, story, asset, exit. Borrower stacks up, story stacks up. The asset doesn't. Most likely that borrower with that story is going to do something to the asset to make it stack up, which means they're going to be able to remortgage it, sell it, and make money.
So if I was a potential borrower and I previously done, so stories previously done 2 buy-to-lets, some moderate refurb work, and I want to borrow, and I want to borrow against my property, what would you say to an individual like that?
So it's interesting. You've kind of taken me on to what we call the Roma personas. Okay, the Roma personas, which is where we profile our customers to understand them and their background, to see whether they're likely to be successful with the project. And I'll come on to answering your question in a second. So there are 3 Roman personas. There is the blue collar professional property tradesperson. So that might be a chippy or a carpenter, it might be a sparky electrician, it might be a plumber, it might be ground worker, it might be a brickie, it might be plasterer. Somebody who's involved technically and technically competent to deliver the project, either themselves, or partially themselves, or with their friends network and what have you, because often tradespeople know other tradespeople than their mates. Interestingly, on that side of things, the best profession to see a property project from start to finish is actually a carpenter, because woodwork generally is involved right the way from start to finish in a construction project. So carpenters tend to make the most successful developers that are doing them themselves. Second type of persona is what we call the white collar property professional. Your example, a landlord. Okay, might have done a few refurbs before. Might be a QS, might be an architect. They're involved with property, but they're white collar rather than blue collar. And then we look at them and the team that's involved in delivering what they're trying to do. The third type of customer that we've got, the third type of persona, is the white collar person, white collar professional who's successful in another field. And we believe they've got transferable skills to make a success of property as well. Because essentially, a property project is just like a project management. You know, you've got a schedule of work, you've got a bill of materials, you've got costings. It's going to take time. Things will go wrong. How are you going to trade through when things go wrong? How do you deal with the nuclear missiles and the exocets that come to kind of knock you off track? What kind of resilience have you got? So going back to so hopefully that kind of explains what a Roma customer looks like. And there's grey areas between them, obviously, but essentially we try to box customers into one of those three. So going back to your example, if you have owned a number of buy-to-lets and you've done a few refurbs with a light or a bit structural, whatever, if you then come to us and you're going to say, right, I'm going to build 100 houses, that's probably a step too far, we would have thought. So what we like to see is that we're backing people on a journey, whether they are building knowledge and expertise over time. So let's say you've done some refurbs and you're looking to build 1 or 2 houses. Okay, that would be your next step. We're looking to convert, a high street unit from commercial or mixed use into fully residential. That is a reasonable step that you would take the next step you take on that property journey. So going back to the story, it's understanding the person and the people to understand what they're trying to do, not just for this transaction, but if they're looking to build a relationship with us, how we can back them on that journey. And it's got to be something that makes sense.
Absolutely. Absolutely. I love that. You know, one of the things I do love about Roma Finance is that you seem very much to be purpose-led, right? You've got mottos like borrower first. You have every transaction is unique. You've got the hashtag love to lend, right? So tell us a little bit more about what some of these terms mean and what is at the heart of what you had for Roma and potential borrowers.
Okay, so let's deal with the first one first, which is the borrower first. So borrower first, we have 2 mantras in the business that we talk to our people about. The first one is that you have to treat every borrower like they are your grandma or your grandpa. Okay, and how would you want your grandma or your grandpa to be treated by the lender that they're dealing with? So treat every customer in that way, like they're your grandma or your grandpa. And the only time that you don't is when they don't treat you like you are their grandson or their granddaughter. Okay, so borrower first means that we would never disrespect a customer unless they disrespected us. And typically disrespecting us means not telling us the truth. Okay, we can deal with most things, almost everything, as long as we know what's going on. Yeah. We can help to mitigate, and we can, an engaged customer, even if things go wrong, we'll work with them. We'll sit around the table and we'll work with them. But we have had the odd situation where a customer has lied about X, Y, or Z, or they've diverted money from there to there, or they've not done what they said they were going to do. That's when the trust, because we will always trust a customer unless there is a reason not to. Yeah. So that's the first thing. Okay, that's borrow first. So treat every customer like they're your grandma or they're your grandpa. That's number 1. Number 2, you have to behave at work in a way that when you go home and you tell your mum about your day at work, you want to try to make her proud. Yeah. Okay, so those are the kind of the two mantras that we've got within the business. And so that's borrower first, what that means. And then that translates into the underwriting decisions and lending decisions to understand, is that customer likely to achieve their objectives? If we feel that they're unlikely to achieve their objectives, then rather than have a negative result, we'd rather not do the loan. Yeah. Okay, because we don't want to see people not create wealth for themselves and their families. So that's borrower first, what that means. Love to lend. Love to lend means that essentially we've got to understand that it is our borrowers that pay our wages. Yeah. So unless we lend, we don't earn. So we are you often say to yourself, you get to the mainstream banks, for example, and often like, I don't understand. Why don't they get it? Why can't they? This is such a great deal. They won't do it. For us, it's finding reasons to lend rather than being the goalkeeper saying that let's find all the reasons not to lend.
Yeah.
What can we do and how can we structure this transaction to make it work from that customer's perspective? Obviously make it work from our perspective as well, but make it work from the customer's perspective. So love to lend means it's our borrowers that pay our wages and we recognise that. Number two. The third piece, which is to do with relationships and transactions, is every person that you deal with in business is a relationship. Whether it is a colleague, whether it is a customer, whether it is a supplier of goods or services or money. And the stronger the relationships that you build with all the stakeholders that are involved in your business, the more likely it is that they will be on side if they need to be on side if there's a problem. And taking people on a journey with you, I think, is a key part of business.
I love that.
And I have two further sayings, which is number one, Roma wasn't built in a day. But the last one, which is all roads lead to Roma.
I really like it. I do like the fact as well. I saw you alluded to it at the big start about the interview of how you got the name Roma. Literally, I was thinking maybe it's the city, but it's from your grandparents, Jackson and Rose. I wanna ask now. You've recently launched a product, right? And it's called Roma Pro, and you recently closed a 7-figure deal within 6 weeks, right? Now, what inspired you to get this product or to produce this product? Now, the reason why I asked you this question is that you started a company in 2009, but you actually didn't, it took you about 10 years to secure your first £1 million deal, right? So there's almost been a gradual increase. Now, fast forward to now, you've now released Pro, meaning that have you seen a need for this particular product in terms of the borrowers? Like, you want to tell us a little bit more about that?
Yeah, so we effectively, Roma Pro is effectively the umbrella name that's given to a number of different products within the business, and so it's effectively to back the. So we've got 3 products. We've got Roma Flow, Roma Grow, and Roma Pro. We're kind of debating whether the next one, which should be Roma Turbo, because there's a fast track that we've got as well, which is anyway, the marketing people aren't quite convinced on the Roma Turbo, but anyway, that's something else. So the Roma Flow is all about the quick bridge. Okay, so you need money quickly, typically for a property transaction. What can we do to simplify the process, whether it be the legal process, whether it be the valuation process, whether it be the underwriting process, to be able to get you the money quickly. And we completely reinvented the whole legal process. We had a bespoke, we created back in 2015 what was then a bespoke title insurance product for the business that cuts out a lot of the legal work that's involved. Roma Flow is all around how can we get you, Mr. and Mrs. Customer, that money quickly when and where you need it. That's Roma Flow on a short-term loan. Roma Grow is the development stuff. So if you're taking drawdowns on a loan because you're improving a property, it's a slightly different underwriting process because there is more work involved, typically. More work for lawyers, more work for valuers, more work for customers, more work for us. So that's Roma Grow. You are growing the value of the asset that we're lending against. The Roma Pro is effectively where you are deriving an income from property, typically. So that's the buy-to-lets, typically, but it's also the revolving credit facility that we've recently launched. And so, that is a very, very interesting product, which is essentially you've got some lowly geared or unencumbered property assets, but you don't want to just draw money down on it and pay interest until you've found a property to go and buy. Okay, so what that does is it just gives you the ability to, within 24 hours, you phone us up, 24 hours, the funds are with your lawyer for completion.
Wow.
Okay, and we don't follow the money, so we're not putting a charge on the asset that you're buying because we've got enough security within the one that you already own. Okay, and so you draw that down within 24 hours. You complete the purchase of that property. You then sell it or refinance it once you've made your money, and then you then pay down the facility that you've taken. So those are two products that sit within the Roma Pro branding.
Fantastic.
So that's Flow, Grow, and Pro, and then we've got Turbo, which is we're currently working on.
What would you say to borrowers who say that bridging finance and working with borrowing from Roma, a company like Roma, is too expensive?
So there's two parts to that. The first one is if price is the main driver for you, and for some people it is because they are very price sensitive, then you should wait the 6, 9, 12 months that you need to go and get the cheapest money from a bank.
Yeah.
If you value building a relationship, a long-term relationship with a lender that will have your back, that will allow you, enable you to create wealth for yourself and your family, that it means that you can complete stuff quickly and you've got a human being that you can talk to and you can deal with, and that will add value to the projects that you're doing because of the experience within the team, then that there's a price that you pay for having that kind of relationship. So we charge a premium over the banks, certainly, but it's all the extras that come with that. And our long-standing customers, and we've had customers for 10 years or more now, that value that relationship, and they rinse and repeat because of that relationship. But again, if price is the thing that drives you, we are probably not the lender for you, and that's fine because of all the other bits and pieces that you get on the back of it. So that's number one. Number two is if you are taking a bridging loan, you've got to understand that your money, you're only borrowing it for 6 months, 9 months. Okay. And so whilst let's say your interest rate might be, and it won't be as high as this anymore, but let's say it's 1% a month. Okay, that's 12% a year. It's only costing you 6% for 6 months.
Yeah.
Okay, so you've got to factor that in as a deal cost, like you're buying bricks or like you're buying cement or like you're buying plaster for the project that you're doing. And a good lender is worth its weight in gold to a property professional, because they know that it's a win for everybody. It's a success moment. So our success moment is completely aligned with our customer's success moment. Most of our loans, the bridging and the developments, they're not serviced. People don't make the monthly payments. So we only get our money back when the customer crystallizes an event at the end, whether that's a refinance or a sale.
Yeah.
And we've got to pay all of our overheads, we've got to pay all of the wages, we've got to pay all of the interest costs on the money that we borrow in order to put out there. So we have to, there's a massive working capital requirement within our business that we have to manage to be able to give customers the products that they need to make their projects successful. And if the money is only out for 6 or 9 months and it's only costing you, 6%, if it's a 1% a month deal, then I don't think that represents bad value, enabling you to create material wealth if you're making, good money, and you should be, quite rightly, from the projects that you are going into.
With rising interest rates, and this is twofold question because you spoke about rising interest rate, has that seen a shift in behavior from developers? And I'll ask because they're two separate questions. In fact, I'll ask it now, and let's see. I'll ask it now because I'm mindful of time. You place a lot of what you do on relationships. Now, one of the things I know about you when you first started back in 2009 is that you would actually go to some of your borrowers' houses, literally face to face. But as a business now, you've grown to over 70 people. The business has expanded. My guess is that you can't go and personally visit everybody, right? So what processes do you have in place to ensure that relationship is there as well? So that's twofold. I hope you can catch that. I can repeat them again.
So it's simple. We pick up the phone and we talk to our customers. And it doesn't matter whether it's a salesperson, whether it's a case packager, whether it is an underwriter, whether it's somebody within the portfolio management team. We pick up the phone and we talk to our customers. It says, Samuel, tell me a bit about yourself and your background and what you're looking to do and how money can help you. You open it up with that. And it's all about understanding the people that we're dealing with. And going back to it, it's all about every business is, unless it's an internet business, and we're not an internet business, it's all about relationships.
Yeah.
And as I've grown this business, I've become much more around building relationships with the people that can take me on my journey, and therefore I behave in the same way towards other people that we're working with as customers.
I love that. And then the second fold is, how has the rise in interest rates affected borrowing?
I mentioned to you before about the 3 different Roma personas. What we have seen is that as interest rates have risen, so the third persona, which if you remember was the white collar professional from another field, so doctor, dentist, lawyer, pilot, surgeon, IT, finance director, project manager, someone who's high earning in another field, successful in another field, those people have there's a lot less of those people around.
Yeah.
Because the opportunity to create passive wealth for themselves and their family in a rising interest rate environment falls away. Whereas the people who are their own personas 1 and 2, the blue collar property professionals, the white collar property professionals, those people generally can see the opportunity with even in a rising interest rate environment, because they understand, and this is what business is really about, property business is really about, that and this applies to every business, whether you are making widgets, going back to my old engineering days, whether you're manufacturing widgets or whether you are buying property. And this is a skill that people often forget, which is that doing well in business is all about the buying. If you buy well, you can sell well. If you buy well, you can build well, you can sell well. And so what you see in times of volatility creates opportunity. And it creates better buying opportunities for good people. Whereas the people that don't understand often the property cycle have to be paying other people to do work for them because they're not doing it themselves.
Yeah.
It's less profitable for them. And because they've also got other commitments, they can't spend the time, or they haven't got the time to spend to seek out better buying opportunities. Property is all about buying well.
Yeah.
So which is why we've seen, in times of material volatility, we've seen times of material volatility as a real opportunity to scale our business. So Brexit, COVID, the war in Ukraine, the ship was stuck in the Suez, all Trump, these are all opportunities that mean that good people can buy better, which gives us an opportunity to expand our business. So again, going back to it, it's all about the borrower and what in times of volatility, that's when people do the best business. It's a bit like what Warren Buffett says. You be fearful when others are greedy, be greedy when others are fearful. And in times of volatility, people are fearful. The people that can buy well get greedy.
That's amazing. Have you seen this? Is just a random question from what you've done. Is there an area within the UK that demands your service the most? So there's more opportunities that you're finding in a particular area. Are you seeing that?
Yeah, you have to be agile around where market opportunities are. So if we think about what happened during COVID led to a different. I just want to let me get rid of this call. Sorry. COVID changed what people wanted from property.
Yeah.
People wanted more open space. People wanted to holiday more in the UK. So holiday lets became more popular, particularly around coastal areas, and people looked for properties with gardens, whereas before that, a lot of young people in particular and professionals were moving into the centre of cities because they were happy. They wanted to be around the buzz and noise and restaurants and coffee shops and work and what have you. So it changed. And as a business, you've got to be agile to understand where the current market opportunities are. And again, what we look for is, as part of the borrower story, asset exit, it's all around the exit will also depend on the property or the project someone's doing going into a market that is liquid at that time. And so again, we've seen post-COVID that people are going abroad again for holidays much more. And therefore the holiday let market in the UK is still buoyant, but it's nowhere near as buoyant as it was 4 or 5 years ago. And so you've got to be agile around understanding where opportunities are to make sure that the customer is creating a product ultimately that's going into a liquid market.
Fantastic. We've seen the rise in AI. How do you think AI could impact the finance industry and especially your industry?
So I put that into ChatGPT and see what it comes up with. This is actually really a bot that's doing this through AI. No, I'm joking. AI is potentially huge, and we are starting to use AI in our business. So for example, treasury management tools. We're starting to use AI to make sure that we are optimizing what we do with the cash that we've got. Number one, on the back end of the business, we are starting to use AI to make sure that we are dealing with all of a customer's issues and concerns that are raised either in an email or on a phone call. So they'll listen to the calls, they'll examine the emails and say, right, Samuel raised this point that wasn't answered. Right, we now need to go back to Samuel and say, you raised this issue on a call or an email with us. Sorry, we didn't deal with it. This is the answer to that question that you posed. Because you've got to be able to make sure that customer sentiment is positive where it needs to be positive. But in most cases, it does need to be positive. And that you are dealing with all the material issues and concerns that customer has got. So we're starting to use AI intelligently. But what's very, very important is that within this business, the human touch will always be the intelligent touch.
Yeah.
So you can use AI and you can use tools to go and gather data and to give you an interpretation of the data. But ultimately, where a thinking decision needs to be taken, we still will always want a human being to be talking to another human being to really understand sentiment and to really understand that we are properly dealing with issues that people raise.
Finance.
AI will not build relationships for you.
100% agree with that. One of the things I've noticed about Roma Finance, I think last quarter, the quarter before, was your best quarter to date, if I'm correct.
Yeah, Q1 2025, yeah.
And you guys are also have grown substantially to 70,000. 70 people within your organization. My next question is, what has been your strategy, or what is your strategy? The reason I ask you this specifically, I'm seeing that you are making more and more and more appearances. I saw Roma Finance is sponsoring Nick Warwick, I believe. He's got that. The gentleman from Home Under the Hammer, I forgot his name. But you sponsor that YouTube channel.
Yeah, Martin Roberts.
Martin Roberts, you're also on Property Elevator. I'm seeing you post more frequently on LinkedIn.
Yeah.
What is your strategy?
So every year I try to make myself redundant.
What do you mean by that?
So because the business people will only be able to realise their career ambitions within Roma if all of the time that the people above them are themselves moving up through the chain.
Yeah.
And growing their careers. And so again, this business exists because, and one of the things I find most rewarding is seeing other people fulfill their career aspirations within the organisation that I've created. I find that personally rewarding. And in order for other people to grow their careers, if I can relieve myself of some of the duties that I do each year, then the people that I'm releasing those duties to, in order for them, they then will have to release some of their duties to be able for they themselves to grow and pick up the things that I'm relieving myself of, and so it goes down the chain. And so every year I say to my senior team and I say to everybody in the business, try to make yourself redundant. If you try and make yourself redundant, then the people that are working for you will grow in their careers.
Yeah.
They will become better. They will learn. You will grow, and you will develop. And then that also creates opportunities for people coming into the business. And then as the business grows, which it has done, then it creates also opportunities for other senior positions. And when you see that people can step outside their comfort zone and they can grow, you then want to back them further to fill the positions within the senior team that the growth creates. And so that is a philosophy that I think is important. Try to make yourself redundant every single year. And at the moment, I have been freeing up my time to be much more of a sort of ambassador for the business, rather than be as operational as I used to be.
Yeah. I love that. Honestly, Scott, I could be with you for the next 2 to 3 hours. I have so much questions, so I try to just kind of compress everything into a very short time. But what we're going to do, folks listening to this, we're going to have all of Roma's Finance's details, and I know there's many of us that are into property, and you heard it here yourself. There are various products that will probably meet your requirements as a property developer or a landlord or HMO or buy to let, whatever it is. So we're going to leave the details there for you. And also watch out as well, in the next coming weeks, months maybe, we will likely have with some of Scott's team some live Q&A sessions whereby you get to ask all of your questions about potential funding a particular project or so. So we're going to communicate all of that information to you. And lastly, Scott, I always have the last word. Is there anything that you want to, any last words that you want to leave to our audience?
Please can I have some business?
Listen, Scott, it's been an absolute pleasure to converse with you now.
Likewise.
You certainly will, Roma certainly will be hearing from us and our team without a doubt. And for the rest of us, we want to thank you again for tuning in. We hope to see you next week. Take care. And make sure you subscribe and you share, especially this content, to anybody that you know that's in the property industry. Take care and see you all next week.
See you, Samuel.